Hey guys, hopefully everyone is doing well. Today's target is to solve question number 25 in series. It is question number 13. The chapter which we are related with is financial statement with its adjustment, where we will make profit loss statement and balance sheet statement. As usual, you can see that we have two sides, and one very important aspect regarding this question is no debit balance or credit balance is mentioned. So, my dear students, please note it down that you will have to be very much careful about this sort of question. Why? Because assets, liabilities, expenses, and incomes are all mixed. It may be possible this side previously was considered debit, so asset and expenses were supposed to be present over here. But right now, liabilities and incomes can also be present over here. Look at here, capital is your liability, commission received is your income, sundry debtors are your asset, and purchase return, opening stock, these are expenses. Have you seen that assets, liabilities, expenses, and incomes are all mixed? So you will have to be focused and careful. Secondly, we concluded that it's not a trial balance because debit and credit sides are not given separately. Next, we do have few adjustment beside this question, which is usual since we are related with adjustment in financial statements, and we are going to solve or enter these adjustment as our first step, and then whatever is present in these in this trial balance we will be solving and entering these elements later on. So guys, you have seen the shape of the question. I'm sure that you people are mentally prepared for solution of this question. We have taken a brief introduction. Now we are ready to solve our question. So let's begin. As I have told you that as a first step, we will solve adjustments. So let's start from here. Adjustment number one, closing stock. So you do know that closing stock is part of cost of goods sold statement. So here, opening stock, add purchases, then less returns, and then we have closing stock, and I have written all elements, all expected elements of cost of goods sold. So it is impossible you need to calculate gross profit, almost impossible without opening stock, without purchases, and without closing stock. It's not possible to calculate the cost of goods sold. That is why we usually write it as our first activity. Amount of closing stock is 23,000. So here 23,000 is your first effect. Then you will go to your current asset side, and here you will mention closing stock as your second effect, 23,000. So you have seen that first adjustment, it was having two effects and we have completed them. Now next is there is a loss of stock by fire to the extent of 20,000. The insurance admitted the claim for the loss of 12,000. So here it's very interesting entry. You can see that loss by fire is 20,000. This is your first part. Then insurance admitted the claim, that means they have not paid but accepted that we will pay in future 12,000. So actual loss, guess how much amount of actual loss had happened. Look, total loss was 20,000. 12,000 we will receive from insurance company. It means actual loss is 8,000. So let's adjust it. First of all, you will go over here and we need a little space, so let's transfer it over here. And since it's a loss, so you will mention loss of stock by fire, because entry for loss is loss to purchase. Purchase usually we write on debit side, when it is credit side it means it's decreasing. So total loss of stock was 20,000, you will put over here. Next, you will go to operating expenses and will mention loss of stock by fire, but you will write what actually happened. This was explained like total loss was 20,000, but out of which 12,000 you will receive from insurance company. So it means actual loss is only 8,000. And since this promise of insurance company to pay 12,000 is receivable for us, so you will go over here and will write receivable from insurance company, and how much that is mentioned, 12,000 they will be paying. Look at here, 12,000. Alright, once again you have seen that 20,000 total loss subtracted from purchases, actual loss was 8,000, so you have put in operating expenses. Insurance company promised to pay, it means it is receivable, 12,000. Two adjustments are completed and we have completed their dual effects as well. Someone will ask, these are three effects. Look, first and then second and then third. But actually these are only two effects. 12,000 written over here, 8,000 written over here. It means 20,000 first effect and this is 20,000 second effect. So only two effects we have made. Two adjustments are completed. Now let's see what third adjustment is saying. Depreciation of plant and machinery. So you will go over fixed asset. Here you will write plant and machine. The actual value of plant and machine will have to see. Not present over here. Yes, we have got plant and machine. Now you can see that I have started my search from left side because assets are usually written on debit side, but this question is unconventional and plant is written to the opposite side. 20,000 is value of plant. Now the depreciation rate is 10%. So here you will write less depreciation, and how you will calculate, amount of asset is 20,000 and you will multiply 10 divided by 100 because rate is given. Once again, what is 20,000? This is amount of your asset, means plant, and then you will take 10% depreciation. First effect is completed, so you will go to operating expenses and here you will mention depreciation of plant and you have calculated it as 2000. Just mention 2000 over here. After depreciation of plant, we have fourth adjustment, depreciation of travelers samples. Again, samples are your asset, travelers sample, and we will now see how much amount of traveler samples are. Here we have got, and the amount is 2700. Mention over here, after which you will subtract its depreciation. And how you will calculate depreciation? For that you will need to have the rate 33 into 1 over 3. So what you will do, 33 multiplied by 3 plus 1, it would be 100. 100 divided by 3, that would be 33.333. Alright, so amount is 2700. Here you will write 2700 here, and then you will multiply it with 33.333 divided by 100. Once again, I'm telling you how did we calculate it. 33 multiplied by 3, it is 99, then plus 100, 100 divided by 3, answer would be 33.33. Here you will be able to calculate the depreciation. What was 2700? Value of asset, then multiply by 33.3. Please note it down as many times as you can. Please write down, because you will have to save yourself from decimals. So 900 is your depreciation, and you will mention it depreciation of traveler's sample. So guys, you have seen that we are going to depreciation. Okay, second effect of depreciation is completed. You have seen that 900 is depreciation, which would be subtracted from travel sample as well. This was your fourth adjustment. Now let's see what fifth adjustment is saying. Write off 1/2 of advertisement expenses. It means you will go to operating expenses. Here you will write advertisement, and it is said to take only half. Come over here and search for advertisement expenses. We are not finding in upper part. Look, we have got advertisement expenses were 8,000. So just mention 8,000, but it is said to take only 1/2. So these would be written off advertisement expenses. 8,000 was the amount of advertisement, and it was said to take 1/2. So 4,000 would be written over here. Then where remaining part would go? Obviously, the advertisement half is related to this year. It means remaining half is related to next year. So that would be prepaid. So you may write advertisement next year. You will mention so that it should not be misunderstood. Advertisement is actually expense. Why we are writing in asset side? Because it is now related to next year, and it is said half. If half is 4,000, remaining half would also be 4,000. So you will mention in close asset side. 5 adjustments completed. Now 6. Increase. Last 3-4 questions we are continuously observing and doing increase in bad debts, but today it is very different. Look at here. The word increase is used, but beside that, this word is very important. Increase to. Normally, whenever we have seen in previous question the word increase, beside this word we usually observe by. So previously there was increase and by, and today it's increase, but second word is to. Whenever you see increase and the second word to, there will not be any change. You will be solving it as you were solving simple bad debt adjustment. What was that? First you will write bad debts, then you will add additional bad debts, then you will add new provision for bad debts, and then you will subtract old provision for bad debts. Just I'm going to write this D. Okay, so similar, it was similar in what we were doing in previous questions. Just one word had change or expect. Now you have seen that why I am going back to the original procedure of bad debt, just because of this word to. Whenever you see increase and to, similar way of solving bad debts we will be doing. So let's start from here. First step was to write sundry debtors. Let's see how much amount of sundry debtor is present. There we have got amount of sundry debtor is 14600, put in front of here. We will now search for any additional bad debts. No, no other bad debts are present. This is bad debt provision, not bad debts. It means we have zero additional bad debt. These are not present in question. They were supposed to be present at adjustment, but they are not. After that, you will calculate new provision. And how you will calculate this new provision? You will go and see. Okay, we do not need to calculate because percentage is not given. Instead of percentage, we have exact amount 2000. So here you will be writing provision for bad debts, and that is 2000. Alright guys, so we do have only new provision, and that is mentioned in adjustment. Two effects we have completed. One you have seen, this would be subtracted from debtors, and secondly it is part of bad debt adjustment. Four elements are present, and we come to know that there are no additional bad debts, so zero. Two out of four elements related to bad debt adjustment we have completed. These bad debts and all provision both will be present in trial balance if they are. So it means this adjustment has been completed. Now seventh adjustment is saying is paid, insurance is paid 1st March 2005. Annual insurance premium is 1200. Please note that we have paid up to 1st March 2005. And let's see what closing date of this question is. 31 December. And the year is 2004. While we have paid this insurance up to 2005. Look at here this month, 1st March would not be included because it's starting. So January and February, only 2 months. This would be considered your prepaid. We will go to operating expenses, and here first you will mention insurance, and less it's prepaid. How you will calculate? 1200 was for full year, we need only for 2 months, so multiply by 2 divided by 12. This would be your prepaid. Note it carefully. Insurance prepaid, total annual payment of insurance was 1200. You have calculated just for 2 months. How much? What was 1200? It was amount of insurance for 1 year. Multiply by 2 divided by 12 and you have got your prepaid. And second effect of prepaid would be in current asset. So prepaid insurance 200 you have just calculated, and this is written over current asset side. So guys, in this way we have completed 7th adjustment. That means all adjustments are completed and we have entered each of adjustment with its dual effects. Now we are ready to enter these elements of trial balance into our statement. And at start I was saying, and it was informed that these are mixed elements. Asset, liability, expense or income all are written in the same sequence, no separation, no segregation. So you will be very much careful to observe and write. So first we do have is drawings. We will go to fixed liability and here statement of capital. Then you will add your net profit and then you will subtract drawings. And amount of drawings given in your question is 5000. So write down 5000 in front of it. After drawings we have cash in hand. This is part of current asset. So here cash in hand, amount of cash in hand is 110. Oh, there was Typing error. Okay, after cash in hand we have cash at bank, again current asset. Perhaps we need a space. Cash at bank. Amount of cash at bank is 2000. Write down over here. Then we have sundry debtors 14600 already mentioned. Look at here 14600. Then we have stock and it's 1st January, it means it's opening stock. Value of opening stock is 32,000. Put over here 32,000. We do have only single effect of these. Then we got purchase return and that is 4,000. These are your returns, 4,000. After which we have commission received, that is 600. So you will go to other income side and here you will write commission. Since it is present in income side, so indirectly we will understand that it's commission received. Amount of which is 600. Alright, after commission we have outstanding expenses. Once again, this was supposed to be present at adjustment, but due to its presence in trial balance sort of thing, it would have only single effect, outstanding expenses, and we will go to liability side. And here in current liability, you will mention outstanding expenses. Amount of outstanding expenses 6800. Just write down in front of outstanding expenses. Then we have creditors, again current liability, and we will write over here these were sundry creditors. Amount of sundry creditors 30,000. So here you will mention 30,000. Alright. Look, dear fellows, it's very important to write amounts because you can see that there are dozens, almost 100 amounts you need to put. Just one more zero or less zero can ruin your progress. So it's very important to be careful at your exam to write your amounts. So we were writing sundry creditors 30,000, now capital 41,000. Here you will write 41,000 of your capital. Okay, I have seen creditors whether it has written with the right format or not. Okay, sales 289600. Here you will mention 289600 its amount of sales, and we will wait for its returns as well. 289600. Yes, we do have. And after sales we have sales return 600. We have just fixed and reserved the place. Today I am writing amounts with little less care, and continuously one more zero and one less zero is happening. Next, after sale return we have provision for bad debt. This is your old provision. We have already reserved a place over here. Amount is 600. Look at here, provision for bad debt 600. Then advertisement 8,000. And I think we have mentioned it. Okay, already done, because you can see that advertisement was 8,000 and we have adjusted just 4,000 because half was written off. Alright, it means advertisement is not needed to be written over here. Alright guys, we have completed left side and now we will focus on right side. First element is goodwill, which is your fixed asset. and here you will write goodwill. Amount of goodwill given is 5,000. Put amount over here. And after goodwill we have plant of 20,000. I think we have written, yes, 20,000 completed. Then we have traveler sample 2700 already written, 2700. After which we have purchases 171,000. Here 171,000 already its place was reserved. Then we have transportation inward, this is direct expense. So you will come over here, transport expense. Okay, just write down full, write down in full. Transport charges are 1500. Put amount in front of it. Now again 10 was extra. I am not in a position today to write exact amount. Wages, it's part of direct expense. So you will write wages over here. Amount of wages 23,000. So 23,000 would be posted over here. After wages, coal, again it's a direct expense. So you will mention over here coal, gas and water. Amount of coal, gas, power 9,000. Write down over here. I have written water, actually it's power. Okay, we can change it, but gas, coal, power. Then we have rent and insurance. This was to be written in indirect sized. Insurance is mentioned over here collectively, so it means you will be writing it as rent and insurance. Amount of rent and insurance is 19900. 19900. All right, so we have completed insurance, after which we have salaries, part of operating expenses, mention over here. Amount of salaries 34400. 34400. All right, then we have discount, but look at here, credit is mentioned, so you will go to other income side, and here you will write discount. Amount of discount is 1800. Write down at this place. Then we have general expenses. Look at here, general expenses, part of operating expenses, mention over here, general expense. All right, amount of which is 8600. All right guys, after general expenses we have travelers commission, and commission is not mentioned whether it's an income or expense, but since these are written in between expenses, traveler expenses, traveler salaries, so we will assume it's an expense. So we'll go to operating expenses, and here travelers commission, amount of which is 2890, and you will be mentioning in front of travelers commission. After which we have travelers salaries, again it's an operating expenses, travelers salaries, amount of which is 9100. We do have very short space now. I forgot the amount, 9100. Alright. After travelers salaries we have discount and debit is mentioned, so we'll go to other expense side, and here we will mention discount. Since it is written on expense side, so we can assume that it's an expense. We do not need to write debit. 5000 is your discount amount. 5000. Okay guys, this was the last element which we were supposed to write. That means all elements of you may call it a dummy trial balance. Every element present over here has been entered. All adjustments are entered with their dual effect. So we are now ready to start our calculations. First we will see our direct side, amount of sale minus return, net sales arrived. Let's start calculation for initial part of cost of goods sold, opening stock, then plus purchases, after which you will subtract loss of stock, again subtract returns, again subtract closing stock. So what we have got is 156,000 initial part of cost of goods sold. Now you will take sum of direct expenses. Both are okay. So here is time to calculate cost of goods sold, final cost of goods sold, where initial part of cost of goods sold plus direct expenses. So we have got final amount of cost of goods sold, and here you will now calculate amount of gross profit. This is sales and less cost of goods sold, after which we have got our gross profit 99500. Let's check from the book. Okay, gross profit is 99500. What does that mean? That 1 out of 4 parts have been solved. Look at here, gross profit 99500. Now we can focus to our operating side. First we will solve for bad debts. Here it means bad debts were not present in question because it is empty, and there were no additional bad debt. Provision for bad debt was present, and you will subtract old provision. So we have got final amount of bad debts adjustment. Then we have rent, and we need to subtract prepaid. All right, after which there is no other adjustment. So let's calculate sum of all operating expenses. Look at this, a big detailed list of operating expenses. All operating expenses are calculated, and the next is your other expense. Operating income is not present, you can mention 0. Then we have other income. There are 2 other incomes, so simply we will add both and got other income as well. So guys, in this way we have mentioned all 4 parts of indirect side. It means we can now start our calculation regarding our gross profit, our net profit. First gross profit, then you will subtract sum of operating expenses, then you will add your operating income 0, then you will subtract other expense, that was 500, and then you will add your other income, that was 2400. So what we have got is 5910. And here you can see 5910 is your net profit, and our answer is also 5910. So it's a happy moment because 2 out of 4 parts we have solved, for which you can see that both answers matched. Next step, to go to liability side, and here you will write your net profit. You have just calculated 5910. You will mention in front of net profit in liability side. Now you are open to calculate your fixed liability side capital plus net profit minus drawings. So we have got total of fixed liabilities. There is no other fixed liability, so you can mention it over here. Now we will calculate total of current liabilities. There are 2. So simply you will take sum. Now we'll see if reserves are present. No reserves, so 0. So finally we can take sum of fixed and current liabilities. Fixed liability 41910, current liability 36800, and we 36800. And then finally we have got the sum of all these three, 78710. This is answer of balance sheet. Let's check it out. Okay, you can see that we have 78710 and this is 78710. It means our liability side is completed. 3 out of 4 parts we have just completed. Now let's start calculation for asset side. First, plant and machinery, and we will subtract its depreciation. Then samples less its depreciation. It means we can take sum of all fixed assets. There were 3. Sum of fixed assets completed. Now we will see current assets. Here you can see that sundry debtors, there were no additional bad debts, so same amount would become over here. Then less new provision of 2000, calculation completed, and there is no other calculation. So finally you can take sum of all current assets, and here you have taken the sum. Investments were 0, so you may mention 0 over here. So there were 3 parts. Fixed asset 24800, current asset 53910, and you have taken the sum of these two amounts and you have got 78710 is total, and you know that our balance sheet answer is also 78710, and we have got the same. So in this way we have completed our question. But we have done, I would like to show you, there were 4 parts, 1, 2, 3 and 4. This first portion was for direct side. That means gross profit or gross loss were supposed to be calculated over here, and you can see 99500 and here 99500, after which this was your second part, indirect side, and here you have calculated your net profit. Amount of net profit we have calculated is 5910, and look at here, 5910 was mentioned. Then this was your asset side. This part was for asset side, 78710, and look at here, 78710, and then last liability side, again answer was absolutely matched. There was not a difference of even single digit, 78710, 78710. So guys, this was your question. It was very interesting, and once again I'm telling you to be very attentive for these two adjustments. Depreciation was old, write-off was little new but not complicated. Here there was a loss. This was new adjustment, and I'm requesting you to please repeat and revise this. And what we have done, total loss was 20,000 subtracted from purchase, 12,000 was receivable from insurance company. So total loss was 20,000, but we will recover 12,000. So it would be recovered receivable asset side, but what amount which was not recoverable, That was 8,000 actual loss we have written in operating expenses. Then this one, increase bad debts. This increase bad debts and the word to changed our perception, and we have chosen the old way of calculation of bad debt adjustment in spite of presence of word increase. So these two adjustments were new. I'm requesting you to please repeat and revise them. So it means our question has been completed. All four parts we have solved and their answers are matched. Balance sheet is equal. Now, please take a very humble request to please solve this question and practice this question as many times as you can. And after practicing, if you see anything difficult, you may share your problem through messages, text, or you can directly communicate. I will humbly be trying my best to answer your question quickly. So thank you very much. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.